you're a founder or business owner, probably you know that two things happen all the time. First, you take decisions, and second, you need to follow some rules. These rules often come from legal obligations, following rules and regulations, but some others come from how you choose to run your everyday business. Of course, we know that the outcomes don't always match our expectations, and the gap between expectations and reality is where risk appears. As part of our everyday business, two concepts often come in: risk management and compliance. Now, many people use these terms at the same time as if they are the same thing, but they are not. Yes, in some cases they are related, but they are not the same thing, and we should not treat them as such. Why? Because they solve different problems, and it's important to understand the difference whether we are a small business or whether we are a large regulated financial institution. For businesses to succeed, often they rely on specific things to be continuing. For example, customers will continue buying, suppliers will continue providing, or employees will continue performing. Risk appears when these expectations change because it can affect the outcome and the profitability of the company. Risk management means that we understand this reliance, this dependency, and that we are considering them in our everyday decisions. We understand that some things that we expect to continue may change, and we take measures to protect our organization from the adverse consequences. This helps businesses act before these changes become big problems. Let's see an example. Let's assume that a company has few clients and relies on those few clients for its future and its profitability. And let's assume that one customer leaves. These may create huge problems for a company because it relied on only a few customers for its profitability. It's neither whether this is right or wrong, it's a business decision. But the company needs to consider that when it's designing its business plan. Or another example, a company depends on one supplier, and if that supplier stops providing materials, the company may find itself in a very bad situation. Or if there are delays, this may cause operational disruption. Another company may grow fast and hires people quickly. Some of these people may not be so experienced, and this may create errors, mistakes, customer dissatisfaction, and this can affect again our business. That's why it's important to take preventing measures to protect our company from the adverse consequences when things go wrong. Now, in regulated sectors, in sectors where businesses need to consider strict implementation of laws and regulations and they are supervised, risk matters more. Let's take the example of a bank. A bank does not only care about running its own business, but it holds client funds. It operates globally. A single bank failure can affect a wider economy, and we have seen that many times in many countries. So the risks are higher because a bank failure may affect whether customers will be able to access their funds, whether customers will be able to execute payments, especially those who are dealing with imports and exports. Trust of the customers may drop and may start withdrawing, creating liquidity problems to a bank. And as already explained, the effects may be wider, may affect a whole economy or a whole country. How about compliance? The focus of compliance is to ensure that the company follows its legal obligations, the rules established by the law. It answers one question: are we doing what is required by law? All businesses are required to comply with specific regulations. This can include tax rules, employment rules, data protection rules, or customer protection rules. In regulated sectors, institutions need to comply with some additional regulations. For example, they are required to prevent and detect financial crime. They are also required to comply with market regulations and many other regulations. The role of the compliance department is to translate these legal obligations into processes, into policies, into controls, and ensure that these policies, these processes are followed in a way that results to compliance with the regulatory obligations. So risk management is about understanding our risks and taking measures to prevent our company, our business, from the adverse consequences when things go wrong. Compliance is whether we follow what is required by the law, meaning it focuses on legal obligations. Risk management asks, where can we be affected? Compliance asks, are we following the rules? Now, how are they connected? In some cases, compliance cannot be achieved without risk management. For example, let's take anti-money laundering compliance. A company subject to AML rules is required to identify the customers and ensure that they are who they claim to be. They are also required to monitor their transactions to prevent and detect potential criminal activity. And then, if they identify suspicious activity, to report this activity to authorities. Now, let's assume two different customers. One customer has a predictable activity, the transactions make sense, everything is okay, they onboard the client, and he starts making transactions. Another client may have a more complex profile, maybe a large business operating in multiple countries, having many subsidiaries, linked to other companies dealing with imports and exports. You understand now that this business is more complex. So the risk of being involved in financial crime is higher because the activity is more complex and it's more difficult to monitor this type of business. Under anti-money laundering obligations, companies are required to understand the risk associated with each and every customer and take measures proportionate to those risks with ultimate purpose to prevent and detect potential money laundering. You cannot be compliant with AML regulations if you don't conduct effective risk management. Understand the risk associated with your customers and with your business as a whole. In many cases, businesses and organizations are compliant with their legal obligations. But the question is, do we understand the risks imposed to our business? Maybe we are doing whatever we have to do. We do the reporting, we follow the rules, the internal policies, the processes. But if this is not associated with understanding the risk behind a transaction, behind a customer, behind a complex structure, then we may miss some potential suspicious activity. And if we cannot spot suspicious activity, we cannot fulfill our obligation to report this activity to the authorities. Another area where risk management and compliance is connected is what we call compliance risk. Every business has the risk of non-compliance with the legal obligation, and this risk must be considered and companies to ensure that they can mitigate those risks, because the risk of compliance failure may result to penalties, to sanctions by authorities, and even suspension of license in case the entity is supervised. So the key takeaway is that compliance and risk management solve two different problems, because a business can follow all the rules but still may have unmanaged risk. How does this affect your business? It's not enough to see completed processes. Risk is evolving on a daily basis, and companies need to consider that in their day-to-day decisions. So, understanding the difference between risk management and compliance is very important. Compliance helps you meet your legal obligations. It ensures that the appropriate steps are followed, processes are followed, and that you can demonstrate that when needed. Risk management goes beyond that. It helps you understand whether your business depends on certain things continuing as expected, how these conditions are changing, and how your decisions increase or reduce risk exposure over time. And in practice, this is where many organizations struggle. They see the processes are completed, they see that the reports are also submitted on time, and that creates a sense of control. But at the same time, if the business grows, operations may become more complex, pressure may increase in specific areas, and decisions are made with less depth than before. So both risk management and compliance matter because businesses may follow the rules and still move into a position they don't fully understand. So when you look at your business, the question is not only whether obligations are met, the question is, can you see how risk is evolving across your business? And do your decisions reflect that reality? That's what separates a business operating with awareness from the one that reacts only when something goes wrong.